How to invest your first $5,000 wisely. If you've saved your first $5,000 and are wondering how to invest it smartly, congratulations! You've already taken the most important step, deciding to invest instead of letting your money sit idle. Building wealth isn't about luck or timing. It's about strategy, patience, and diversification. Here's a simple, balanced way to invest your first $5,000, inspired by time-tested principles of successful investors like Warren Buffett. Okay. Invest 50% in an S&P 500 ETF, VU. Half of your portfolio, around $2,500, should go into a low-cost S&P 500 ETFs, such as VOO. The S&P 500 tracks 500 of the largest U.S. companies like Apple, Microsoft, Google, and Coca-Cola. By investing in it, you're instantly owning a slice of the most successful businesses in America. Why it's smart? Diversified exposure to the U.S. economy, historically strong long-term returns around 8 to 10% annually. Low management fees and high liquidity. This is your core foundation. Steady, long-term growth with relatively low risk. Invest 25% in an international ETF, VXUS. Next, allocate $1,250 to an international ETF, like VXUS, which includes companies outside the U.S. from Europe to Asia and emerging markets. Why it matters. Global diversification protects you if the U.S. market slows down exposure to fast-growing economies like China, India, and South Korea. Companies like Samsung, Nestle, Toyota, and TSMC give your portfolio a worldwide reach. Remember, the world's economy doesn't revolve around one country. Owning global assets spreads risk and increases opportunity. Invest 25% in individual stocks, your ETF. Finally, invest the remaining $1,250 into individual stocks you believe in, small to large cap companies with potential. Start with brands you understand and use every day, such as Johnson & Johnson, Pepsi, Home Depot, or Tesla. Tips: focus on 3 to 5 quality companies, not dozens. Study their fundamentals, earnings, debt. Competitive edge. Hold for the long-term. Treat this portion as your learning lab. This part of your portfolio allows you to take calculated risks and learn how markets really work. Bonus tips for beginners: use a trusted brokerage with low or zero commissions, for example, Vanguard, Fidelity, or Charles Schwab. Set up automatic monthly contributions. Consistency beats timing. Reinvest dividends to accelerate compounding. Stay patient. Wealth grows quietly over time. Final thought: your first $5,000 is the foundation of your future financial independence. By diversifying it into 50% S&P 500 ETF, VU 25% international ETF, US 25% individual stocks. You're not just investing money, you're investing in discipline, learning, and long-term growth. As Warren Buffett wisely said, do not save what is left after spending, but spend what is left after saving. Start today. Your future self will thank you.